This video is brought to you by Brazil Resources, trading on the TSX Venture Exchange under the symbol BRI, and on the OTCQX International Market under BRIZF. Brazil Resources just announced an agreement to acquire 100% of the Cachoeira project from Luna Gold Corp. The deal terms imply BRI is paying $18 an ounce for gold in an emerging gold district in northern Brazil, located near BRI's other 3 gold projects. The company is 35% institutionally owned, with 16% of outstanding shares held by the KCR fund, controlled by Doug Casey, Rick Rule, and Marin Katusa. The geological team has earlier discovered more than 10 million ounces of gold directly in Brazil, and is led by successful mining CEO Amir Adnani. To learn more about Brazil Resources, visit BrazilResources.com or call 855-630-1001. Greetings and thank you for joining us at FutureMoneyTrends.com. I'm here with Chris Duane, founder of Don't Tread on Me, the Silver Shield Report, and the Sons of Liberty Academy. He's definitely one of the strongest advocates for owning physical silver that I know of. He's also somebody who I believe everybody should listen to because he'll stretch your mind. Whether you are just learning about inflation or the Federal Reserve, this is definitely a site you want to visit. But even if you've been in this for years, and maybe in 2008 you were looking at this thing and saying, I'm buying some physical precious metals, opting out of the system, I find it very refreshing when I listen to him. Today you're going to hear us have a discussion on a few things that I probably don't agree with him on. So I'm not questioning his beliefs, I'm probably questioning my own. And I think he's a good guy to talk to about it because he's very open-minded in the sense that he's willing to discuss any topic and probably deal with any question. Chris, thank you so much for being with us today.
Oh, it's great to be back.
Chris, I'd like to start off. Our last interview, we kind of went over the macroeconomics of the situation, what you saw coming, and kind of an introduction to you and basically the solutions. And I really like that because you're one of the only people out there that are actually talking about solutions. But I want to start off with the first one, and that's stocks, owning businesses. I didn't own stocks 4 or 5 years ago. I was shorting them and that type of thing. But, after talking to people like David Morgan and Rick Rule and Doug Casey, I've become somebody who kind of is into buying businesses. And instead of talking about the miners, I wanted to talk to you just about like owning companies like a Becton Dickinson, which makes syringes, or a York Water, who makes or is a utility company that paid a dividend even through the Civil War. Owning big companies like a Coca-Cola, Chevron, owning big companies. What is the risk in owning companies that are more than likely going to be around in 100 years from now through the stock market?
Yeah, I mean, the companies could be around, but what's the ownership? Talk about General Motors that's been around forever, and, the bondholders get wiped out and the stockholders get taken care of. All of these companies are only profitable in the paradigm that we're living in. Right now we have the American empire that spans the globe with this trillion-dollar military and unlimited debt that funds this, and we can print as much money as we want and do whatever we want with it. That day is coming to an end. There's many other nations out there that are moving aggressively at dumping the dollar and no longer accepting it. China just signed a deal with Brazil, Japan, Russia, and most recently Australia to dump the dollar in bilateral trade. Most people don't realize that all these nations throughout the world who own probably 2/3 of the dollars out there have held dollars overseas to transact business. And it would seem crazy for an American to trade with Mexico using the British pound. But that's essentially what all these other nations are doing. They're using our dollars. And now they're moving away from it. And this whole debt-based, unfunded liabilities is 44 trillion if you're using cost numbers of unfunded liabilities, this generational debt, the $1 trillion that are, we've thrown on the student debt, the housing bubble, which I'm sure we'll get into, is all built up on this perception of debt. And right now, in 2008, or prior to 2008, the consumer, the average person, was the one that was creating all this debt through their excess risk. And ever since 2008, people have blown through their safety net. No longer have equity in their houses. Many people don't have jobs and are systemically unemployed. If you're 50, 55, 65 years old and you've been unemployed for 3 years, you're not looking good for any retirement, much less ever getting employment again. The system is changing. The debts are too big. There's too much excess built in the system. And when it comes to valuing companies, how do you value a company when you can't even value the currency? We're 5 years past the 2008 crisis, and we have 46 million Americans, more than all the people in Spain, are on food stamps. I mean, something is systemically seriously wrong in the country. And yeah, I believe that a lot of these companies will be in existence afterwards, but you can be sure that it's going to be an awful rough ride between then and there. And then the real reason why I don't own any stocks, and I haven't owned any stocks for a long time, is simply because of counterparty risk. I know that you like mining stocks, but it goes with all companies. You have the counterparty risk of bad management. You have the counterparty risk of uncertain or shaky finance markets. You have the counterparty risk of stock manipulation. You have the counterparty risk of energy spikes or unsustainability. I mean, the mining industry is the toughest business to be in when times are good. Throw in energy crisis, throw in financing crisis, throw in labor crisis. There's many mines in Spain and in Argentina in Mexico that are having labor strikes. So there's just far too much risk, I believe, out there, and that this entire system needs to have a great reset, and that's not going to end until all the debts that have been accrued for the past 4 generations are completely wiped out, and what I believe is going to be the single largest event in history, the collapse of the dollar. It's this systemic thing, and I want to get ahead of it, and I believe that this generational shift is from intangible counterparty risk that was very popular in the 80s and 90s, and ever since 2000, the swing has been the other way. If you measure the Dow or the S&P, I mean, you look at the S&P, it's a perfect example. S&P in 2000 hit whatever the record 1,400 that it was then. And we all felt very wealthy back then. The tech bubble, the baby boomers were in their peak earning years. The economy was great. We were, like Clinton, we were doing awesome. We felt that, and that was probably real wealth. And then the S&P hits, goes through, gets hit with 9/11, and over the next couple of years, we build it up into 2007 and hits a record again at 1,400. And yet that bubble didn't feel as healthy because it was built up on the housing bubble. We knew that really wasn't real wealth. That was a bunch of speculative buyers and, Wall Street repackaging and loans and stuff like that. But yet, at the bubble level, at the stock level, it hit that record. Then the 2008 crisis happened. And now we're back up there again. And I don't think anybody's feeling what we did back in 2000 or 2007. And the reason why is because they've devalued the dollar so much that it really doesn't mean anything. And I would challenge any stock investor to value their stocks not in terms of dollars, but against real assets. And I don't care if you do it with gold or oil or wheat, cotton, your tuition, your medical bills, something that has a track record. And I can guarantee you that if you measured the S&P or Dow, measured in terms of silver or gold or oil or wheat or some real commodity, you would see the decimation in purchasing power of those dollars relative to the real assets, the real wealth that I think people are going to need when the dollar collapses.
Now, if these companies are real, I talked about with Andy Hoffman. I don't know if you got a chance to listen to that interview, but I want to avoid using the mining stocks because they've been such a horrible investment. So I just focusing on these big, gigantic world dominators. Like a Becton Dickinson. I don't know if you're familiar with that, but just for anyone who's not, people listening, Becton Dickinson, I own a small amount. I'm talking like $3-4 grand. But so it's a small, and it's $1 billion company, world dominator. They do 70% of syringes, that type of stuff. I mean, it's just a business that's just going to be there no matter what happens, unless we're talking like solar flare or nuclear holocaust. But I mean, otherwise it's going to be, there's a need for that business. And I'm just wondering if people purchase the stock direct through computer share or perhaps demand at physical delivery of their certificates. I guess I'm just looking to find out if you think there's any risk in. So your answer was there's not really a risk in that the business will go away, but you're saying there's a risk in actually owning the stock that somebody could. Are you worried that somebody could take your ownership?
No, it's a value proposition. Like, what's the what's the opportunity cost of that? And like I watch like Gone with the Wind. Okay, Scarlett O'Hara's father owned a bunch of Southern bonds. When the world changes, people's values change, and I'm telling you that when the dollar collapses, we're going to have breakdown in all forms of social, financial, and political contracts. This is an unsustainable system. This is, things that cannot go on forever long. And while these companies may exist, is it going to be the best way of transporting your wealth from one financial reality to another? These companies may be billion-dollar companies with international assets, but they rely upon maybe who knows what government contracts they get, who knows what financing they've been able to do. If they have the majority of their sales overseas, what happens with a currency crisis or oil going to $300 or war and uncertainty? And we're 5 years past one of the largest financial crises that we have, where admittedly they said that there was going to be martial law if we didn't get that bailout. What happens now that has not been cured? It's only been covered up by sovereign nations. And back in 2008, we had institutional crises, the AIGs, the Lehman's, and the General Motors. And now it's at a sovereign nation level. You don't hear about that companies going broke anymore. Now it's cities like Stockton. It's nations like Cyprus. It's much larger than that. And I'm telling people this is going to happen very big, and that you need to get in. I think there's only three things that are going to save people, coming through this shift. Mm-hmm. You need real assets, things that you can hold, touch, use. I don't care if it's food, guns, water, ammo, gold, silver, a hammer, something of real tangible value that cannot be inflated, taken away, counterparty risk, taxed, things that you own. The next thing is real skills. The majority of humanity right now doesn't do anything of real value. We don't produce, harvest, or transport real value. To me, that's what real wealth is. And then the third thing is, unfortunately, in the age of Facebook, you need to have some real friends. Stop digitally phone calling, Skyping, linking, doing stuff. You need to get in contact with some people and have some real conversations and sweat and laugh and do stuff together. And the shift from this intangible virtual reality world of wealth and friends and jobs is going to shift dramatically hard to a very real world. And values were going to change dramatically then.
Chris, do you think that the powers that be are going to shift? Will there be, because a lot of the people who are in power and the elites, they own, I want to say they own over 50% of the assets in the stock market. So I tend to think that, sometimes, I guess, it's kind of like people who say we should short gold at 8:20 and 10 a.m. every day. It's like, I don't want to, I don't want to think that I'm going to own silver and all of a sudden I'm going to come out of this okay and Mr. Billionaire who controls the world is going to be broke, because I kind of tend to think that investing in some of the things they're investing in might not be a bad idea. Where am I wrong?
Well, first of all, I think that anybody holding stocks, they're millionaires, multimillionaires, and billionaires. And then there's the rest of us. But there's also this little group of people called trillionaires. And while the average listener is going to listen to this and go, "Oh, that's impossible. Bill Gates is the richest guy in the world, and he's only worth $40 billion." There are families that own the privately held central banks of the world. And trust me, they don't own stock. They own the central banks. They own national debts. And I believe that there's going to be a war or a destruction of the millionaires and billionaires who have their faith inside the system. But I can tell you what, the real powers, the Putins, the Saudi royal family, all these real wealthy people, the Rothschilds, the Rockefellers, they own gold, they own oil, they own real resources, and that's how they made their money. So I believe that the average silver holder will be far better off than the average multimillionaire guy owning any stock in any market. when the currency collapse happens, because you can look no further than Weimar Germany or Venezuela or Zimbabwe and see that when a currency goes, it doesn't matter what asset class you're in, they all get destroyed relative to real things. I can tell you for a fact that fuel and food will be the best asset to own during a currency crisis or a shift in wealth, simply because that's what humanity will sacrifice the most for. Secondarily to that, I believe it's going to be precious metals.
Now, in Zimbabwe, their market did rally, as well as in Weimar, several... I don't know about the whole market. I haven't studied it extensively, but I do know people who held larger companies in Weimar Republic. They did come out okay.
Well, and then look at what happened to the economy, that they came out okay, and sure, they could own, part of a company, but I can tell you what, an ounce of gold bought a hotel. So what was a hotel company worth that you may have held on to the stock, during the hyperinflation? Yeah, you own the stock, but relative to an ounce of gold, you would have been better off in gold and silver. So, people need to, my biggest thing is listen to all is falling on. Do your own research. Think about it. I'm highly into silver. I'm the only guy that I know is 100% physically invested in silver. I own no paper assets whatsoever. So I'm definitely the oddball out there. But I cannot find any case where I'd want any paper asset during a dollar collapse.